Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, the 15th of January, 2020, about 5:10 p.m. Central Time. So in looking at the markets today, would you know it's an impeachment day? Would you know that they've already handed over the impeachment articles? Not when the market reopened, I'll tell you that. The stock market's still just taking it all in stride. We're getting a little bit of a rally after really bearish EIA numbers on the net number of the distillates, the gasoline, and the crude oil supplies, and yet you're bouncing today after a good break. And I like the action that's starting to happen here in the rebob. And as you know, in case you don't remember it, I have put out a special energy report. You can go visit it on our website, and I'll come back to that in a bit, at www.iraepstein.com under the word research. Now, if we take a look at bonds and notes, they too are pushing up. So we've come down quite a bit from that 192 area to the 180 area in the bond market recently. Gold and silver had good rallies today. They're holding on to them. The copper market, not disappointed. Now the market's got to look at the next event that's taking place, and that event is the USMCA deal, which could be passed by the Senate as early as Friday. President probably sign it next week if they would do that. In the foreign currency market, I'm seeing resistance right here. Now, there's a lot of talk in the market circles that the Swiss National Bank is getting to the point where they could surprise us at any point with some intervention, as the euro and this market have broken apart from each other, and it's gotten quite a bit stronger in the Swissy. But let's go to the marketplace and see what's going on. On a weekly area chart of closes, let's applaud it. I mean, it's midweek here. We're up 32.5 points at new all-time high close. Nothing wrong with that at all. As you can see, this market, since what I call missile day right here, has just moved higher, not giving you much of a chance on the break other than that one break. And that seems to be how this goes. You get these sharp breaks, and then the market just moves up and away. Now, eventually, all patterns don't continue to do what they did in the past, but this one is still doing that. When I look at the swing line, I have the pattern of a higher high than that, and a lower low. So this is still the swing line low, the market running up, and as you can see, well over the 18-day moving average of closes, which is over the 100, which is over the 200. Still a classic bull setup, and we are at that resistance point of the upper Bollinger Band. Now you keep pushing on it ever little each day. Now, as you can see, you're up 375 now, you're up 5 points, you were down 1.75, up 25, down 11. That's what you call pushing, just so I can give you the definition. Yes, you back off and come back over, and that's fine because it's not getting consecutive closes over it and not getting, and I know you're going to argue with me, not getting frothy as a market technician. Remember, the key on a chart is to throw the name off of it. You can even throw the numbers away. Play what the market's doing against your indicators. In terms of the slow stochastic, it's embedded. So until the red line in this number closes under 80, I remain fully committed to the bull camp. Close under 80, and I'll look for another challenge of the 18-day average. And this takes over the higher, high, lower, low pattern. This rules the day until it disappears. In the NASDAQ, same pattern. It's called the embedded reading. It's when the slow stochastics takes both its numbers that are called a K and a D line, and these are the values, and they go over 80 and stay there for several days or more. Until that's lost, you become bullish, looking for the market to be well supported on the breaks. The question of new all-time highs, no, that's not what you're looking for. You're looking for the market to continue to press to the upside. In the Dow, same thing. You have now, do we have the embedded reading? You cannot count tonight, so we got to take today off. So we go to yesterday, both numbers over 80, the day before over 80, not the day before. So it's very important that you get your time frame set, and we are at a resistance point in a market that may embed by the end of the day, but this is where I think the pros are taking some money off the table. The first challenge when you're not embedded especially. In the Russell, You're up to the upper Bollinger Band. You know what I'm going to say. We have sideways action in a narrow band. At any point, you can break out from that to the upside. But the first challenge is where I look for the pros to take money off the table. Is there rotation and maybe the indices going on? Could be. This market at least has the pattern of higher lows, higher highs. It's the only one of them that does, but I won't back off from the first challenge of that band is often where the pros step away. Now, if the market starts a thrust from here, the odds favor it's using this sideways action as a base and it's trying to move out into another leg to the upside. Make it do that before you make that decision. Another event happened in the VIX today. First, even with the stock market up, the VIX didn't fall. Second, we had an outside day up yesterday. If you take out the low of an outside day up, it's often a sign that the market wants to challenge the closest of the moving average under it, and we don't have any, they're above the market, or the Bollinger Band bottom. That's what it did today. So I'm still looking at that 1160 area. Now, what do I think the pros will do if you get there? I would not be surprised if they write puts, trying to get the market from there back up to the 1304 area. We'll see if that happens. In the bond market, the pattern is one of higher lows, higher highs. I look for resistance right here between the upper Bollinger Band that was hit today, Tuesday, this is Wednesday's trade, and the 100-day average of closes. That should be a rather formidable resistance area. We're already, with tonight's trade, overbought. Any reading over a 70 is overbought. No, that's not bearish. That's where I think the pros are taking money off this table. When we get to the 10-year notes, I see that combination as still being the resistance, the 129.20 area, let's call it, up to the 129.23, the 100-day average. That's what I'm looking at. The market's still very much in an uptrend. TLT in an uptrend. Higher lows, higher highs, riding the upper Bollinger Band in an overbought condition. So yesterday you got up and hit a high of 138.82. The Bollinger Band was 139.10. Today's the first day that you hit that number. So in between that and the 100-day average is where I'm looking for the resistance in this market to show itself. I think the pros are taking some money off the table. In the dollar index, you've stepped out of a trend. You now have a pattern of a higher high, a lower low. Up until this point, you had the pattern of higher lows, higher highs. The question in this overbought market, would the market be able to make it into this resistance area of 97.36.5, let's call it, to 97.55? And with today's answer, I think it's defined as no, it's going to go into a churn pattern, and that's what I'm seeing on the charts. In the eurocurrency, okay, here we are with the markets trying to come up. This was yesterday's close. This is today. The market finished at 1192.5, right on the 18-day average of closes. So the bias is neither up nor down. Tonight's action, the market is trading at 1191, back under that number. The battleground's that 18-day average. The market is trying to say it wants to go into an uptrend. We'll see if it's able to do that. But this is the number that I'd be looking at very hard. The British pound, this is a market that is oversold, trying to get back to that 18-day average to determine what next. Should the market take out 131.21, the downtrend ends. If the market can just stay and climb a little bit each day here, maybe it works off the oversold condition. It's nowhere near getting embedded, which makes it a difficult trade. Japanese yen, yesterday, if you can see, 2 days ago, it's the first time it hit the lower Bollinger Band. We've since had a bounce in the market. Will the market develop an embedded reading? Remember, you can't count today. You've got to take a look at the market the day before that, and the day before. You need today to be one of these days where the market locks itself in to embed. You won't know that to the close of business, so I'll just consider the market void of trend. Momentum has hit the downside target. We'll see what next. Bitcoin, no surprise to try to work to the right-hand side of the upper Bollinger Band. You only stay over that 5% of the time. Therefore, getting up to it on the first challenges, coming back down, coming back up in an overbought condition. Are we embedding? Both numbers are over 80. Both were over 80 today, not the day before. Tomorrow is going to be an important trade session for the market. Actually, not tomorrow. Let me take that back. This is Wednesday. This is Tuesday. You can't even begin to embed. Got to wait and see what it does. We're just in a resistance area. Remember the halving. That is what Bitcoin followers are watching. This is what they're building on for the April-May timeframe. In Brent versus WTI crude, for those of you that get my written research, I have a big report tonight on what the EIA is talking about for 2021 in both Brent and WTI crude with graphs and everything. You're going to see that as you get the report tonight. And that's the advantage to getting my full research. A lot of you take only the morning videos that I have, or you take these. You don't get the research. The morning video at least gives you more than you're getting here, and then the full research gives you twice daily written reports, and I include a lot of outside reports in that as well. Suffice to say, still very much in favor of the Brent, which makes sense given world politics. We've gotten the Brent lower highs, lower lows, an oversold condition that hasn't yet reached down for the lower band. It might. How many days do you have to have? You don't have 3 days under the 20 reading to say it's even further to the downside. Obviously, this puts a lot of pressure on that Saudi Aramco deal. When you come to WTI crude, this is called riding the lower Bollinger Band. And if we look, we have to throw out today's data, or tonight's for Thursday. So you have your first day where both numbers are under 20, and that's it. So you're just in an oversold condition that has hit downside targets. It's riding itself. And as I said yesterday, if it wants to extend the break, maybe, just maybe, you can get in between the 100-day average and that. I mean, don't get me wrong. I could be wrong and the analysis should go lower. But as a technician, that's about all that I'd be looking for. I think the smart money's taking some money off the table. In gasoline, you know, I did an energy report. This action fits in with what I was very much in the report, but I'll let you see the report tonight to get a feel for what's going on. You got the higher high, lower low. The market is oversold, not embedded at all. And in the nat gas, that first challenge again from down here to that 18-day average, a total failure. This market just got too much natural gas. Weather doesn't cooperate. You're knocking on the door of contract lows. It's hard to be anything but overall bearish in this market still. And the question is, can it crack? In my head, at least, that's the question. Can it get through the $2 level and cause the bulls to just say, what the heck am I doing here? I don't know, but we'll find that out. So as I told you, I did an energy report, and I did it on the gasoline market because we start talking, we're already, remember, at the 15th of January. So traders will say, Ira, you know, gasoline doesn't go up in January or February. Really? I'll show you on the seasonal charts in this what the market has a tendency to do. And there is a caveat. Past performance is certainly no guarantee of the future, but it's a tool. And I look at it. Then I look at the price counts, and they're in the charts that I did, and you'll see that we got to what's called a third level of the price count. Now we've pulled back in consolidation. The question is, what next? I give you the weekly charts. I give you the daily charts. So I'm giving you a lot of information to go with this. How do you get to this report? Simply go to www.iraepstein.com under the word research. Got it? If you have problems, you can always click up here. It'll take you to those areas as well. In the meantime, I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.